Let's talk about gold. For centuries, it's been seen as the ultimate safe investment. But after a price swing so wild it gave Wall Street whiplash, everyone's asking the same thing. Is gold's golden era just getting started, or is it way too late to get in on the action? Today, we are going to break it all down. So, picture this. Just last week, the price of gold didn't just go up, it absolutely exploded. A huge investor rally sent it flying past everyone's expectations to a shocking all-time high of $5,600 per ounce.
But, that party didn't last long. In just a few hours, the price took a nosedive, plummeting all the way back down to $49.21. And just like that, a staggering $2 trillion in market value? Gone.
Now look, this wasn't just some random blip on the radar. This chaos came right after a massive 165% climb over the last 2 years. So what in the world is happening here? Is this a huge warning sign, or is it a massive buying opportunity? Let's get into the arguments.
Okay, to make sense of all this, we're going to look at it from every angle. First, that wild price swing itself. Then, we'll dig into the two big arguments, the case that gold is just way too hot, and the case that it's just getting warmed up. We'll see what the pros are saying, and then we'll get to the real core tension that every single investor needs to understand.
So let's kick things off with that crazy price swing. This whole thing didn't just come out of nowhere. It was actually the explosive finale to a rally that had been building for years, until it just suddenly kicked into hyperdrive.
For about 2 years, gold was on this nice, steady climb. A big reason for that was central banks buying it up because of all the global uncertainty. But in the last month, man, things got wild. A speculative frenzy kind of took over, pushing prices up another 30%, and that's what set the stage for that brutal drop we just saw.
And all this chaos has pretty much split the market right down the middle. You've basically got two camps now. On one side, you have Team Bear, who are screaming caution, and on the other, you have Team Bull, who are absolutely convinced this is just the beginning.
All right, let's start with the argument from Team Bear. They're looking at these charts, and they're basically saying one thing. Gold has flown way too close to the sun. They think the market is dangerously overheated, and you need to be extremely careful right now.
The bears' number one concern is that the price just went too far, too fast. They see a market that's overbought, which basically means it's been bought up so aggressively that there aren't many buyers left at these crazy high prices. They think it's being driven more by hype than by solid economics, and that makes it super vulnerable to a huge crash the second people get spooked.
As fund managers like Scott Turris are pointing out, the easy money, it might have already been made. The folks who got in early have probably seen the best gains, and jumping in right now could be like showing up to a party just as they're turning the lights on to kick everyone out.
But here's the hidden risk that a lot of investors don't really think about. For years, the biggest buyers of gold have been central banks. But what happens if those same governments get into financial trouble? Well, the temptation to sell off their massive gold reserves to raise cash is a very real threat. A move like that could just flood the market and cause the price to completely collapse.
Okay, but on the other side of this whole debate, Team Bull says this is anything but hype. They think that bears are totally missing the bigger picture, that there are these powerful long-term forces that are fundamentally changing gold's place in the global economy.
So a huge part of the bull argument, and a concept you really got to get, is currency debasement. All it means in simple terms is when a currency, like the US dollar, loses value because a government just keeps printing more and more of it.
And look at this number. This shows you exactly why the bulls are so worried. A mind-blowing 80% of all US dollars that exist today were printed since the beginning of 2020. I mean, when that much new money gets pumped into the system, the value of every dollar you have goes down. And for a lot of investors, that's a huge red flag, pushing them towards a physical asset like gold, which, can't just be printed out of thin air.
This is exactly why bulls like Ben McMillan don't see this as just some temporary spike. They're calling it a fundamental repricing, which means the world is basically reevaluating for good what gold is actually worth in our financial system. For them, this isn't a bubble. It's the new normal.
And it's not just about printing money. We're seeing this trend of de-dollarization, where major countries are trying to move away from relying on the US dollar. You add in all the growing instability around the world, and you get what the bulls call a flight to safety. In scary times, countries and investors all rush to gold, which pushes the price up simply because it's seen as the only truly safe place to put your money.
So we've got two really compelling arguments here, but they are polar opposites. With a divide this big,
Where do the experts on Wall Street actually think the price of gold is going to end up?
And wow, this chart just perfectly illustrates the complete and total confusion in the market. There is zero consensus. You've got predictions ranging from Macquarie Group's very bearish call of $4,200 all the way to UBS seeing the price soar to $6,200. That is a massive spread, and it just shows how uncertain everything is right now.
But here's the crucial thing to understand. Gold's rapid, shocking climb has completely shattered everyone's expectations. Price targets that seemed wildly optimistic just a few months ago now look kind of conservative, or even pessimistic. It just makes the future even harder to guess.
Okay, so how do we make sense of all this conflicting info? Well, it really all boils down to one central, underlying conflict that is defining this market right now.
This is the whole tug-of-war in a nutshell. On one side, you have the bulls, who say deep, structural forces are pushing gold higher for the long haul. On the other side, you've got the bears, warning this is all a speculative frenzy, a crowded trade that's at huge risk of a panic sell-off. The big question is, which force is stronger?
So what should you really take away from all this? First, just get that gold is being pulled in two directions: the long-term fundamentals, like the value of the dollar, and the short-term emotions of the market. Second, understand that even the pros are completely split, so there are no easy answers here. It means anyone thinking about investing has to weigh that powerful bull case against the very real risks that the bears are highlighting.
And that leaves us with one last big thought to chew on. Is gold's wild ride a sign of its lasting strength as a true safe haven in troubled times? Or is its price just a giant mirror, reflecting our own collective fear and uncertainty right back at us?
Hey, thanks for digging into the whole gold debate with us. If this explainer helped you make a little more sense of the market chaos, be sure to subscribe for more deep dives into the topics shaping our world. And if you want to explore this stuff further, we've put a really helpful resource link for you down in the description.